Okay, so welcome to the True Potential Performance Monitor for August. So today I'm going to look at stock market returns during August and also analyse what's been happening globally. So what are the key themes? So before I talk about that, the first thing that I'm going to do is just tell you about some exciting news that we've seen at True Potential. And that is we're about to launch a new fund range with one of the best wealth managers, one of the most respected wealth managers in the world, which is UBS. So look out for that news, which will be coming through over the next week. Okay, so let's have a look at the returns now. So as you can see from the slide, equity markets have enjoyed some excellent returns over the month. Looking at Japan, which has been one of the best performers, Shinzo Abe, the Japanese Prime Minister, announced a stimulus package, a fiscal stimulus package of around $256 billion, so a huge amount of money. And that's basically to fight deflation and also to drive growth. Moving on, looking at the UK, what you can see from the UK is we've seen some really positive returns since Brexit. And that's been a function of the currency, actually, which is sterling weakening against most major currencies. And what that means is if you're a UK-based company that is exporting overseas, so is selling products overseas, you get a translation effect from that currency, which really boosts your returns. Finally, looking at fixed interest, we see that global high yield has performed very well. And the reason for that is investors are looking for comparatively higher yields in what is quite a low interest rate environment. Okay, so let's move on. Let's look a little bit deeper into exactly what's been happening. So I'm going to start off with the UK. And as I said before, sterling weakness has been a real benefit for many companies within the UK. But actually, there are other reasons as well. If you think about it, Theresa May came in incredibly quickly. And that's been a real positive for investor sentiment towards the UK. And it's also helped to settle investor confidence. Next, I think if we think about that, however, we're living in quite an extraordinary time with profound central bank intervention and influence on markets. What we've seen is central banks have been propping up the liquidity within bond markets, and that's in quite a sort of falling yield environment. What a lot of investors are nervous of is that yields could continue to fall. However, this has been underpinning risk assets. The chart in front of me shows a graph of the 10-year gilt, so the 10-year UK government bond, and it shows the yield on the government bond. You can see how that's falling. So the key takeaway from that is actually if you were to buy that right now, you'd receive a return of under 1% for the next 10 years. Okay, so finally for me, looking forward, what we're seeing is a lot of investors are quite nervous, markets are quite high. They believe that valuations are looking quite rich at the moment. However, there are still opportunities available. Central banks are propping up growth. They're adding a lot of stimulus into stock markets, which potentially could give some very good returns. What we're sure of is that we will continue to see disparity in asset class returns. And what that means is investors need to be diversified by asset class, by currency, by geography, by investment style, and this is exactly what we offer at the True Potential. What we do is we've set up our True Potential portfolios. These offer the widest level of diversification in the market at the moment. And again, we believe this is the best way to navigate through short-term events, through short-term fog, and to help protect returns. Thank you very much.